Hi, I'm John Taylor, Head of Private Capital at Dexus. Today, I'll be discussing the latest fund in our opportunistic investment series, Dexus Real Estate Partnership 2, or DREP2. I'll shortly introduce Jason Howes, the fund manager of the DREP series. We will answer three simple questions. Why invest with Dexus? Why DREP2? And why we believe an opportunistic investment strategy is well positioned for the current market. Dexus is one of Australia's leading real asset managers, with $61 billion in funds under management across real estate and infrastructure. We manage assets both on balance sheet and on behalf of leading institutional investors and wealth management clients. Dexus is listed on the Australian Stock Exchange with a market cap of over $8 billion. As a leading real asset manager, Dexus has a compelling track record in delivering enhanced returns. Since 2012, the Dexus opportunistic trading strategy has delivered an IRR of 30% per annum across 23 completed projects and delivered over $540 million of trading profit to the Dexus balance sheet. The Dexus Real Estate Partnership Series was established to give investors the opportunity to invest directly in this strategy. The first fund in this series, DREP2, successfully raised $475 million from a combination of institutional and wealth clients, and included a $100 million co-investment from Dexus balance sheet. In addition, the Dexus balance sheet can invest alongside the fund, further increasing alignment between investors and the manager. DREP1 is being deployed and is on track to meet its return targets. DREP2 is the second fund in this series, and we're inviting institutional and private wealth clients to again invest alongside Dexus. Jason Howes, the DREP fund manager, will now take us through why the current market opportunities are ideal for the opportunistic strategy of DREP2.
Hi, I'm Jason Howes, fund manager for the DREP series. I've been in markets for over 25 years, and the dislocation and disruption in the market today are providing some of the best opportunities I've seen for a fund like DREP2. We've seen the fastest and largest interest rate hiking cycle on record. Real estate yields are rising, triggering asset price falls. The listed real estate market has repriced and still trades at a discount. And the availability of debt for real estate, particularly development, is materially constrained. These factors are all contributing to price dislocation. And from dislocation, opportunity arises. Research shows that investment outperformance has followed periods of dislocation and disruption. That's what DREP2 is designed for, to capitalise on the market conditions in front of us. Like DREP1, which successfully launched in 2021, DREP2's strategy is to target unlisted Australian real estate opportunities and deliver enhanced returns by investing throughout the capital structure in situations ranging from distress to growth. The fund can invest where we see the best opportunities, the best pricing for risk, and is not limited or constrained to a single sector or a single part of the capital stack. On this chart, we've plotted the Australian real estate market as we see it today. The fund's focus is highlighted and covers two main areas. Firstly, where we see constrained capital or illiquidity. History shows these factors lead to forced asset sales and high credit margins, as asset owners seek liquidity in an otherwise illiquid or capital-constrained environment. The consequent overreaction in pricing, the cyclical overreaction, is where DREP2 will focus, and we are seeing that right now in the residential and office sectors. Secondly, a growing market tends to be characterised by high liquidity for both debt and equity. In those growing sectors, such as healthcare and industrial, rather than compete with that capital, we leverage Dexus's operational expertise to develop or reposition assets for sale into the growing market. DREP2 is deliberately designed to invest from distress to growth throughout the capital structure and across the Australian real estate sectors. As you can see, we have a compelling cyclical opportunity here, and we're investing into it today.